All right, folks, a record number of American households have some cash now allocated to the stock market. It is absolutely amazing. And as the rally has begun to sort of register new highs, many on the street now think, well, it's bearish, right? You know how Wall Street is about the dumb money. Ironically, though, individual investor sentiment just this morning we found out, which has largely been bearish, spiked in the last week. In fact, this is the third highest level it's been this year. Now, my next guest has a great feel for the pulse of individual investors. He's the founder of Tastylive. He's also the CEO, Tom Sosnoff. Tom, you know, this idea of Wall Street, right, this sort of idea that the individual investor is the dumb money and that when they get too excited, it's irrational exuberance and time to find the door. What do you make of that?
Well, Tasty's kind of a think tank, and we've been studying that for a long time, and it's actually the exact opposite. The retail investor the retail investor buys dips, and the retail investor generally has a long bias, and they're usually right.
I find the same thing. In fact, I feel sorry for retail investors that listen to Wall Street because not necessarily your best interest at heart, and certainly working off of different assumptions.
We've always, for us, the dumb money has always been the institutions chasing the market moves.
I want to talk about your investing decision-making process.
Sure.
We're going to put a table up. It's just abbreviated, but if you can speak to it, you look at stock price, you look at expected move, market bias, those sort of things.
Sure. I mean, for us, you know, I've been an option trader now for 44 years. And so a lot of stuff that we do is based on volatility, and volatility is just another term. It's a derivative of expected move. And so we look at things like with reasonable expectations, plus or minus. And so for me, I'm kind of a contrarian, and I look at expected move and try to use strategic investing around that.
So you're ahead of the crowd, so to speak.
Maybe not.
That's the goal. That's the goal.
That's the goal.
Right.
The goal is to be in front. A lot of times you're behind because when the market just goes in one direction, there's not much you can do.
So let's pick up on that because right now you're bullish on Starbucks, PayPal, and Costco.
Yeah, because all three of those stocks are kind of on their butts relative to the rest of the market.
Right, right. What kind of time frame is your typical holding time frame?
So I am kind of that let's call it swing / option trader. I'm cycle to cycle, so I'm 45 to 60 days.
Okay. Neutral. So you've got Nike, Oracle, bonds. Neutral is different for you because you're an option shop.
Neutral is premium selling for us. So neutral means selling calls and puts and just hoping a stock stays within a range. It's a very common customer approach. Remember, our customers are 95% trading derivatives, and the industry is almost 70% on the retail side trading derivatives now, not stocks.
Right.
So a lot of the option strategies are all kind of range-bound strategies.
It's interesting because, you know, one of the things that scares, or apparently is supposed to be sort of a worrisome, has been the retail pouring into options and the use of options and the use of derivatives. You don't see that, though. No, of course. Obviously.
Of course, I'm exactly on the opposite side.
Right. What do you say when Wall Street says that, or someone says, hey, you know what, I just read an article that this is scary?
They just don't understand it. The reason options have become so popular over the last 2 decades is because they're very capital efficient. And stocks, to be fair, are way too expensive for retail customers. So, you don't want to buy 100 shares of a $600 stock or a $700 stock like the Spiders now, and you're spending $65,000. I mean, it's kind of crazy.
Right.
So most retail customers prefer the strategic use of options for capital efficiency.
Tom, on the bearish side, you've got Reddit, Roblox, Tesla, and Meta. Reddit got 2 upgrades today.
Yep.
And one target 290, another target 300. So when you say bearish, is this sort of like not going short per se, but maybe not chasing at this point?
Oh, no, I'm short.
Okay.
When I say bearish, I'm short.
Okay.
Yeah, there's no, like, I'm not playing around with the terms.
So do you use stops?
I do not.
Okay.
I think that the way stops are very misleading, and every retail customer should understand this. Stops are not, they're not fundamentally, they don't really work. What you should do is just keep your size small. Mm-hmm. The best way to defend yourself is on trade size. It's not with stops.
Good stuff. Hey, man, you are a legend. You've been doing some innovative things for a long time, and so it's good to have you in the studio. Thank you.
Thanks for having me.
Appreciate it.